Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. As always, over the next 2.5 hours, my colleagues Sonia and Nigel with me. Guys, hi, good morning.
Hi, good morning, Prashant. Hope you're feeling better today.
A little better.
Missed you on Friday.
Yeah, and it's a big day tomorrow.
What is it? I don't know.
Today's Feb 13th, right? So
14th.
Inflation numbers going to be
That is day after tomorrow for us. And I get your point.
Nigel's a big believer in Valentine's Day, by the way.
For sure.
All the gifts coming up. And
I'm a big believer. My parents, they started dating on 14th of February. And for me, it's
For Nigel, though, the gifts are all incoming. Huh? It's not outgoing. So that's...
I hope so. But I'll track the inflation number.
All right. So it's a nice... mood with which we begin this new week. But is the mood globally, this upbeat? I would say perhaps not, right? Let's just quickly run you through what top of mind really markets are watching out for. This is the picture on Friday and what we had. The Nasdaq was down 0.6 odd percent. And you've got the dollar index, which actually surged. It's now closer to 104. So equities are down, the dollar is up, and oil prices are now closer to $86 a barrel. So this is, the trioca, which is not moving in the direction you want it to. You would want the reverse. And that's the reason why I'm kind of going to begin by saying that things are looking a little more adversarial. The global setup is looking a little more adversarial. Nasdaq going up and down is fine. But the bigger thing is what's happening to, the dollar, which is going up, and oil prices which are moving up as well. These are yields, by the way. Look at the sharp surge we've seen in the last week. This is Friday to Friday, the 2-year, which is the front end of the US rates market, the 5-year and the 10-year, 23, 27 and 22 basis points up. So the market has very quickly repriced itself to expect more rate hikes, maybe rates to stay higher for longer. All of this, of course, happening after last Friday. Not the previous Friday, but the Friday before last, when we got the jobs data out of the US, which was very, very strong. Despite all of that, we heard from Fed Chair Powell, right? We heard from him last Tuesday. This is after the jobs data, and he did not sound, he didn't change his view or anything. He did not sound incrementally more hawkish, given the fact that the jobs data was strong. But we had so many other Fed members, and, so many of them spoke, and all of them came across as more hawkish incrementally. So I think we are kind of back to watching the same dynamic. Data is turning out to be strong, and markets are reading that to be a bad signal because central banks and the Fed will have to be more hawkish. But all of this could change. We got the CPI numbers, as we were just discussing, on Tuesday. We will react to it on Wednesday morning. And then on Wednesday, US time, we'll get the retail sales data as well. CPI is the more important of the two, but I think the retail sales number will also tell us how the US economy, the US consumer is doing. If the number is, benign, I think the markets have scope to rally. If the CPI number is, stronger than expected, and I think the expectation is running at about 0.5% rise month on month, I think it's got the scope to dampen sentiment even more. Just come back to here, the market, which on Friday did not do very much, at least at the index level. The Nifty was, down about 0.25%. The Bank Nifty was, a little flat to slightly higher. But the Nifty is once again closed just under, a smidge under the 20-day moving average, which is now at about 17,871. We closed at 17,856. Supports for the Nifty should come in around 17,650. We are, again, that budget day range, the high to low, ever since the budget, we've not crossed the high or we've not broken below the low. We are within that trading candle. The Bank Nifty is, again, just under the 20-day moving average. It's for the Bank Nifty that stands at 41,643. And, the banks, I think a close above the 20. And same is true for the Nifty as well. The 40-day exponential, which is above the 20-day, I think becomes important for the Bank Nifty. That number is at about 41,905. Will we take all of that and will we get to those levels today itself? I think it's perhaps kind of hard. Look at what the SGX is doing as well. But I think those are the levels or the markers to watch out for as we begin another week. Guys, hi.
Hi, morning. There is some scope for the market to perhaps break out of the upper end of the range, right? There are a lot of cues that are stacked in favor of the bulls this morning. But the range has been so, we've been consolidating for such a long time. Let's see if we manage to sort of scale up above that level. Now, foreign investors bought in the cash markets after many days. After, I think, 6 days of selling, FIs bought in the cash markets on Friday. So that's one positive that I'm looking at. FIs bought about 1,500 crores or so in the cash markets. There was a strong handover from the US as well. The Dow was up 170 points. Now, the worry in the macro setup is that Brent is back above $85 a barrel, and Russia, in fact, has said that they'll cut output by 500,000 barrels a day. So that could keep Brent above this level, $85, $86 a barrel. So that's not good for our own markets. But positive global cues, FII buying. Also, remember the Nifty, is finding a bit of a resistance around that 100-day moving average of 17,943. Important to see if that can get taken out today. It's not too far away, but it's proving to be a bit of a hurdle for the market. A couple of pockets to watch. Capital goods stocks could be in focus. Good numbers coming in from ABB. BHEL's numbers were not too bad either. And a couple of the other names have also been rising over the last many days, so keep an eye out on that. And by the end of last week, the Adani Group stocks staged a comeback. So Adani Ports, Adani Enterprises were all up about 15-17% last week. So that entire pocket will also be in focus. But give and take everything, looks like the cues are stacked more in favor of the bulls. But let's see, it may take a while for this market to break above the range.
Well, that's right. Do we have a case to get past at 17,950 to around 18,000 odd marks? That's the question. And maybe this week, the cues could take us, depending on that inflation number. Well, for the past week, after a while, we saw the Nifty performed either in line or outperform some of those developed markets. The Nifty ended more or less flattish. The Nasdaq was under pressure, and a couple of other global peers as well were under pressure. Global cues are more or less stable. We're waiting for that crucial inflation print, which comes out tomorrow. And buying around 17,750 for the last couple of sessions, well, that's worked. Finally, if everything goes according to our favor, then the FI shorts in the system, that's what could provide a bit of a booster shot, because the shots will get trapped on the short side. Let's tell you what are the cues coming in from the F&O markets then. On the Nifty itself, the Feb futures, the premium came down to around 28 points odd. That's telling you that there were some shorts on the Nifty. However, on the Nifty Bank ended more or less flattish, and the open interest was lower, so there was some short covering that did take place out there. On the FI action, well, the FIs ended 10,000 short contracts. That takes the short position to around 82% odd. And it appears they were shorting the Nifty itself. On the option side, no big direction coming out there. They bought close to 2 puts for 1 call. So in case things go wrong, then there is some cushion. But on the writing side, well, they wrote 1.2 lakh contracts of both put as well as the call side. Moving to the options data, the Nifty Bank, that's going to be very, very important. And I say that because the Nasdaq is underperforming and the Nifty IT index has taken a bit of a break as well. So the 41,500 put, well, that was written. Take a rough premium of around 300 rupees. Also, they are counting on the 41,200 odd mark holding out. On the Nifty, well, it's a battle of which way the Nifty is going to swing off the 17,800. Because 17,800 call as well as put, well, they were fairly active. Let's get straight to the levels then. On the upside, the 20 as well as the 100 DMA becomes a bit of a resistance zone. Just take note of those marks, both on the Nifty as well as on the Nifty Bank. While on the downside, in the near term, 17,750, crucial for the bulls to hold on to that. On the Nifty Bank, 41,200 odd. For starters, we're expecting a bit of a pullback. The last couple of days, buying a deeper dip, well, should work out. So maybe closer to around 17,750, 17,800 should be risk reward favorable for the bulls. Let's see how this one pans out.
Okay, I also want to, mention that last week the theme was the new age tech companies, right? And the kind of revival that we've seen in a lot of these names, whether it's Paytm or even Zomato. Today you have Nykaa coming out with numbers, so that would be an interesting one to watch. Of course, there's a sea of numbers today, but apart from Nykaa, there's also SAIL, there's PFC that comes out with earnings, so lots to watch out for. By the way, Bharat Forge comes out with numbers this week as well, so we'll keep our eye out on that. But lots happening on the show.
Oh, absolutely. Let me just quickly run our viewers through what's lined up here in the first half hour of the show today. We'll get you updates from markets across the globe. Mark Matthews of Bank Julius Baer and Company will join us to discuss the global setup. Later, a research team will bring you CNBC-TV18's list of top 10 stocks for the day. And at around 8:30 in the morning, we'll get a fundamental stock check with Prakash Diwan, who will be with us as well.
Okay, all right. So let's begin the show then. On the equities front, first up, we have a comment coming in from Surendra Goyal of Citi. He says the Indian market is at an interesting juncture. Its post-outperformance valuations are high, but India could continue to lead in growth, that too broad-based and domestic-driven. Further, he adds, significant medium-term secular opportunities exist for growth, driven by penetration levels that have considerable room to rise. Market share shifts and the global need to de-risk supply chains. According to Citi, India could potentially lag the upturn in growth elsewhere. in emerging markets, but they believe it's a must-have exposure for global funds over the next decade.
Okay, some money market views as well. This is B. Prasanna of ICICI Bank, who says that dollar strength triggered by last week's strong jobs data remains supported ahead of January CPI as the market is preparing for higher rates for longer scenario. A hawkish MPC outcome helped rupee from sharp depreciation, but the USD INR pair is expected to trade with weakening bias owing to persistent outflows from equity markets and recent dollar pullback. RBI is expected to smoothen volatility on either side, and for this week, Prasanna expects the rupee to continue to trade in a range of between 82 to 83 to the dollar.
All right, and on the bonds, B. Prasanna of ICICI Bank says global yields continue to drift higher amidst higher for longer narrative and stronger economic data. Domestic yields also retraced higher as the MPC announced a hawkish hike and a data-dependent approach. The unwinding of rate cuts that was priced in towards late 2023 had a bigger impact on the derivatives front. He expects the market will take cues from the upcoming inflation prints and trade cautiously, with the 10-year benchmark trading between 7.2 to 7.4% range.
Well, there are plenty of stocks that we need to track for you, and we'll get to that in just a bit in our special Top 10 segment, but we're looking at ABB India, BHEL, Oil India, Nalco, PB Fintech, and Glenmark. They are stocks that could react to positive news flow. On the flip side, you have RVNL, Info Edge, Balkrishna Industries, and Delivery. They are stocks that could be potentially reacting to negative news flow of the weekend.
All right, so that's what's lined up here. Power Pack